But what we're going to do is, as people are getting on, we are going to start at exactly 60 seconds. So if you're watching this during the playback, just click onto the 60-second mark and the video is going to start. If everybody that is live right now has their coffee, or you got time to go get it, grab it. It's going to be early in the morning. That's why I'm hanging out at a gas station right now. But we're going to talk about something really exciting as far as the real estate cycle is concerned. And it's cool how all of this stuff is playing out. So at 60 seconds, we'll start. Give me a quick second to load up on some caffeine. I haven't had any yet. All right. And if we could wake that algorithm up, everybody do me a favor and hashtag coffee down below. All right. Let's see here. All right. All right, everyone. Real Estate Ninja here. I hope you're doing well. We're going to talk about a very important part of the real estate cycle that is spiking right now. It's very important that you realize this or see it happening in real time, because what it does is it gives you conviction. The more knowledge you have, the more understanding you have, the more ability you have to take advantage of a situation where a lot of people have absolutely zero clue that the markets are melting down right now, because they look at the numbers of the market. They don't see the facts that billionaires and centimillionaires are selling all their stocks. They don't see the fact that hedge funds are selling their homes. I can only go over as many news stories as I can to try and wake people up, to show them this amazing opportunity in real estate cycles investing. And in the course that I taught a year and a half ago to show people what would come into the future, so that as they saw it, as far as the real estate cycle, they would build this conviction, right? And this understanding that, hey, I've got to really do something right now to get ready for this, because the more prepared I am, the more advantage, and we'll take advantage of this. Well, in real estate cycles, a couple different points of them is that people start to run out of steam and buyers dry up, right? So you have less buyers in a market than sellers, and then you have low inventory go into high inventory. And then you start to see sellers go into panic mode and start dropping prices. Now, we've seen all of that. Then there's another part in the cycle that where you start to see consumer debt start to rise, because as inflation ramps up, and we're not just talking about the inflation that's happening globally right now, which is way worse than what we had in 2008, 2007. But when we saw back in 2006, we saw the cost of fuel rising across the nation. 2007, we saw the cost of SUVs. People were blowing more money on food. There was more opulence, for lack of better terms, right? So people's debt starts going up. Then what you do is you watch the amount of debt that they're paying off. You know, for a certain amount of time, debt starts to rise, and the average consumer pays it off every month or every couple months, right? But then you start to see 30-day, 60-day, and 90-day late payments start to stack up. Well, we're there now. And then you start to see forbearances, foreclosures, all that stuff. Now, that's just a little bit in the future. Actually, it's already started. I did a handful of videos showing you that foreclosures are going to spike in June. They actually already are. I got a phone call from somebody out of, I'm not going to say where. Let's just say this. In one metro area in the country, last July 15th, they saw 900 foreclosures be filed. So that's happening right now. Okay, so check this out. The big part right now is this is out of Zero Hedge. It's entitled The Last Hurrah. Credit card debt unexpectedly soars despite record high APRs as savings rate hits a record low. So as you see people drain the money out of their savings account, you see their debt go up, whether it be, auto debt, home debt, things like that. That's one thing. Credit card debt's a really big deal, because that's the quick money. I need money right now. And you can tell the level of desperation in the consumer when that spikes, right? Then what happens after that really causes the stock markets, equity markets, to crash down and come into correction mode is when you see rising debt on the consumer side, and then you see unemployment tick up, because now you have more people losing their jobs or getting less hours, right? Underemployment rising. And then what happens is all those people can no longer pay the debt that they went out and got. All right. So if this is making sense to you, do me a favor and type 10. If it's not making sense to you, do me a favor and type 2. We're going backwards so that I can explain a little better. But check this out. 1 month ago, when multiple discount retailers were lamenting the sudden collapse in the U.S. consumer purchasing power, we observed the reason this unexpected hit to the U.S. consumption as the U.S. personal savings rate had collapsed. The growth in consumer credit was slowing, and in July, credit card debt growth posted its first decline since the COVID crash, just in time for another month of record high credit card rates. But fast forwarding just 1 month later, when the stunning reversal of July consumer credit growth unexpectedly reversed and dramatic June slowdown and soared more than 25 billion to a new record high of 5.093 trillion. Now I'm going to show you this chart. Let's just show you 2022 was really bad for credit card debt, right? People were reeling. There was problems with the whole economy was screwed up, right? And so back in 2022, you could see right here, it was high, but it's been steadily declining, and the government has been bragging about how everything's getting better, right? Well, this is what just happened, this spike right here. That's what they're referring to. And even though it's just one spike on this big, on the grand scheme of things, you have to realize back here, things were pretty ugly, right? Inflation was much higher, and things were very scary back then for as far as the consumer, because the government didn't know which way the consumer is going. Inflation was on the rise. They're trying their hardest. They're raising rates to deal with that inflation, and so that's where you had all this. But to see this spike right here, that's sort of interesting. It's an anomaly, right? Because we've been in a downward trend, and a lot of people think that the trend is your friend until the end, because if it's going down today and it was going down yesterday and the day before, that it's always going to be going down. And that is absolutely not the case. Now, looking at the components, the sudden spike in revolving credit was most notable as credit card debt growth suddenly reversed its recent slowdown, surging by 10.6 billion, which is the biggest monthly increase since February and the second biggest of the year. But what may be more notable is that after 2 years of gradual declines in the monthly rate of increase, non-revolving credit suddenly surged by almost 15 billion. Its biggest increase since June of 2023 and its second biggest of 2022. So what's non-revolving? Well, think about vehicle loans, things like that, right? That you have a set loan amount, a set interest payment, and a set, interest rate, and then a set payment, okay? Now, I talk about this in the, and I've talked about it on the channel too, on that Credit Score Pro course, how you use non-revolving credit loans in conjunction with credit card, or revolving credit, or like HELOCs, things like that, to blow up your credit score, to build it up, right? Make it 800, 850. And there's a place for that when you want to use debt to make money. The problem is the people that are doing this right now, they're not investors. This is the average consumer that is getting pinched, and we're being told about it through Home Depot, Lowe's, Dollar Store, now Big Lots, all these stores that cater to the average person, not the elite, right? They are hurting bad. Now, what I think you need to really realize, and this is where it gets really sketchy, unemployment, the Fed knows this, and that's why they're very scared. They're really data dependent, and they're really hesitant to lower rates, because they need to make sure that unemployment is on sort of a nice little rising trajectory. They want you to lose your job. Why? Because the more people that lose their jobs, the less money they have to spend into the economy, which slows inflation, okay? But if they lower rates too soon, they'll spike inflation, because a lot of people go out and speculate. You saw that on the day, simply, that Jerome Powell came out and said, hey, I'm going to lower rates probably next month, it looks like, possibly. And then you saw the markets explode higher, everything from crypto to gold and silver and the Dow Jones and every index, right? So everything, exploded higher, because they're going, hey, we're going to go speculate. And this is what's really, really important, okay? Now, you're going to start seeing people stop paying their credit cards. What will blow you away, and this is what I experienced back in 2006, real estate prices are falling. They're falling everywhere, except very small pockets, like where I lived in California, because there's only 7 homes for sale in the entire city, because of the demographic of who lives there, right? There's a lot of older people that are settled. They've got their long-term jobs, and they don't need to go anywhere, and they're handcuffed by this low interest rate, right? So there's no velocity going on. So those places are still seeing little price surges, but on the whole of the nation, you're seeing all of the large metropolitan areas have problems, except for Las Vegas, which to me is blowing my mind. It always starts somewhere, and it always does start in large metropolitan areas, and it always does start with the cities in the nation that rose the fastest and the highest, right? Because the first to go up is the first to drop. And then you have subsequent drops because people are taking losses in those cities, and then it just explodes out, honestly, like a cancer. So what's one thing that the nation did that lots of people made money during the Great Depression? Tax liens. Tax sales. Why? Because people lost their jobs, they stopped paying their taxes. It's already starting to happen. This is where I'm moving into. This is the next phase of the real estate crash. So you could start taking money and flipping it right now. There's ways of making money right now. And I've just fired up a whole new entity, a company based solely around that and loaning money. I know it sounds crazy because a lot of people say, Ninja, why would you want to loan money or make money available to people that need it right now as things are crashing? It's because there are specific types of loans that are guaranteed, and that's where you make your money. Look, what I'm going to do is I'm putting the link to my newsletter down below. I'm going to make an announcement in 3 weeks of what I'm doing with my new company and telling you how to make money with it. If you want to know information about it, click that below. You'll be the first one to know. And I do believe that this is what a lot of people have been wanting and asking for, because they've got LLCs fired up or they're saving money. They don't know what to do to flip it in a safe environment. And right now I've been moving all to cash and trying to get into all safety pockets right now as things are coming apart, especially going into this election year. Type 11 if you believe that the election is going to cause a lot of chaos in the markets. I would be typing 11 right now. Type 12 if you think, no, it's not going to be that big of a deal. Look, I want you to make as much money as you can, but you can't do that without knowledge and understanding. So keep learning as much as you can. Keep reading books. Keep doing everything you can to keep learning, because this is going to be an excellent, awesome ride. I hope you got something out of this. Thank you so much for watching the Economic... No! I am the real estate ninja right now. I'm going to go over to the Economic Ninja channel in a second and do a live stream on the BRICS nations and something that Russia and China just announced. I think it's really important. Hope you got something out of this. The Real Estate Ninja is out.